Looking at the Markets with David Modell. Hello and welcome to Looking at the Markets with David Modell. You might know about the VWAP. You might know about the anchored VWAP. And if you don't, we're going to learn about a special type, which is mastering the anchored VWAP handoff. I mean, this is some advanced stuff, and yet even if you're a beginner, you should stick around and check out this whole video. I've got a guest who has mastered this technique and is going to explain it to us today. He is Jake from TrendSpider.com. Jake, welcome to Looking at the Markets, sir.
Hey, thank you for having me. I know it's been a while, so I'm excited to get some new content for the viewers.
Yeah, and if you like the platform you're looking at right now, at any point in the video, you can go to TrendSpider.com to get these awesome charts for yourself, or better yet, go to the link in the description below this video and click on it. Because it's going to be hard to really understand all this stuff if you're using all different kinds of charts. You can get all these tools on TrendSpider.com. But right now, Jake is hopefully going to explain to us exactly what we're looking at now.
Yeah, so thanks again for having me. There's something called the VWAP, the volume weighted average price, that a lot of people are familiar with. Now, the typical VWAP is something that's very similar to a moving average, right? There's a length of time you're looking back. So you could have the VWAP 14, which means you're looking back 14 periods and taking the average price over the last 14 periods. Now, there's something else called the anchored VWAP, which allows you to essentially start a volume weighted average price from a status quo change in the market. And what I mean by a status quo change in the market, it could be a swing low, it could be a pivot point, it could be a gap up, where there's earnings and the overall status quo of that stock has changed because new information has come in. And I've been able to master this simply because I was taught by pretty much the inventor of this indicator, Brian Shannon. He's the founder of alphatrends.net. He's literally taught me every single thing about the anchored VWAP, how to use it, how to use the handoff method, which I'm going to go over today. And essentially what it is it's showing you since a reversal or since earnings, what is the average price per share paid since that point in time? And you can see on my chart right now, we have MJ up, the marijuana ETF. And this is what I'll start out with, right? So this is an example where we're looking at a swing low. So you can see here that we are kind of bottoming here. We did kind of double bottom and then essentially hit a higher low here before reversing and hitting new highs into November after the elections. But what I've done here is I've anchored the original volume weighted average price from this low point here on October 30th. And you can see since I anchored that particular area, or the VWAP from that particular area, you can see there were multiple times on the way up where the price respected this area. So we know this is definitely a level of interest for both buyers stepping in and supply drying up. So anyone who had profit, they're back down to their average price. They stop selling, supply dries up, and supply and demand do their thing. So you can see this happened on the way up in early November, but you can also see once we did finally hit a big move up and pulled back, we pretty much found consolidation right at this original anchored VWAP from October 30th. And so what the handoff approach really focuses on is essentially anchoring another VWAP from the last candle to test the original VWAP. So that sounds a little complicated, but it's really pretty simple. You're anchoring from the original low. Once the price action starts to move up from there, you want to anchor another VWAP from that last candle that touched this original VWAP. So notice here, this is the last time that we test this area before moving up. And once we do anchor a VWAP from this handoff point, you can see how well the price action really respects this new VWAP, which is the handoff. And so not only did we respect this area after moving up, consolidating a little bit, and then bouncing off this area to move higher, but once we did hit a new high here in early December, we pulled back, and it's not shocking that we've literally caught a bid almost exactly right at this handoff VWAP from this secondary anchored VWAP we created. So this is something that I was telling you earlier, this is kind of like Alpha Trends anchored VWAP season is what I call it, because there are so many different examples of this happening, both examples that are really pretty, like this one that really respect the anchored VWAP handoff very nicely. But in technical analysis, it's not always pretty. There's times where people have margin calls. There's times where there's liquidity crunches and price action's not going to respect a level perfectly. And so I wanted to start out with MJ because it is a pretty textbook case study with price really respecting this area perfectly. But if we move on to, let's say, the Qs, QQQ has had a very similar setup here, a little different though. You can see here, here's our original anchored VWAP from this November swing low. You can see that we did actually break down through this point on November 10th, and then the last time that we did test this area was on November 11th. So that's where we anchor another VWAP from, and you can see how well the price rode along this handoff one anchored VWAP for over a week. And then finally, we can see the last time that we tested this anchored VWAP, this is where we start our second anchored VWAP handoff two. And you can see here how the price has respected this area for the most part. Now, there are times where we did break down in December, on December 10th and December 11th through this area, but notice how we ended up closing right at this area both days in a row. So even though we had intraday volatility around this zone, we still closed right at this anchored VWAP from this second handoff here. And remember, these handoffs start where the last time the price action tested the original anchored VWAP. So original anchored VWAP, November 11th, we tested that for the last time. We start another VWAP here, that's handoff one. We then tested the handoff VWAP from November 11th. The last time we tested that was on November 24th, and we haven't tested it since. So that's where we create the second handoff, and you can see that's really worked well so far. So there are so many different examples of this. I'm going to go over a couple case studies, but I also want to touch on something called the anchored VWAP pinch. And I'll go over that here shortly once I've gone over the last couple examples. Another really great example of this is PLTR. Now, this is using the anchored VWAP in a little different of a way. So as I mentioned, we really want to anchor the VWAP from when the status quo has changed in the market. So essentially what that means is a breakout point, a low, a pivot point. In this case, on PLTR, we were really trying to break out of this this IPO high here. You can see here on September 30th, we hit around 1134, and then we went up to that area and consolidated for over a week before finally breaking out here, which is shown by this green circle. So this is what I would call a status quo change in the market. This is when buyers came in, they stepped up, price started to move up higher to new highs, and that's where we want to anchor our original VWAP from here. And notice, same type of thing. We tested this area multiple times, and it was respected multiple times. And on top of that, we gapped down on December 2nd, and where did we end up? Right at this original breakout anchored VWAP here. So that's where we want to start a handoff point. So essentially, at this point, we create another anchored VWAP like we did in the other examples, and this is our handoff anchored VWAP, which you can see has acted as a perfect level of interest for buyers multiple times. But this is a volume weighted average price. So it's really an equilibrium price from a particular point in time. So let's say that the price is trading at 30, 31 bucks. Once the price gets back down to this area, that's where everybody's average price since this bottom is. So when we say price is bouncing here, it doesn't necessarily mean it's bouncing because buyers stepped in. It could simply mean that it's bouncing because nobody has any more profit from this original, or excuse me, this secondary low. And since that point, everybody who's bought in, their average price is right around this 25 area. So just because the price is bouncing here doesn't necessarily mean buyers had to step in. It could simply mean that supply dried up because nobody has any more profit to sell. And so you can see here, today on December 15th, price has respected this area once again. You can see a lot of the time price will intraday move down through these areas, but then it will eventually close above this zone, and that's exactly what we're seeing today. Obviously, the day's not closed yet. As you can see, price action is still moving, so we'll have to see if this actually closes through it. But this is just another great example using this handoff approach, but rather than anchoring the original VWAP from a swing low, we're anchoring it from this breakout point here, which is really, really something that I like to use a lot. I've used it on quite a few different examples that have really shown some interesting results. Amazon's a good example of that. Apple's a good example of that. If we have time, I may even jump into those real quick and show you guys another example of that breakout anchored VWAP. But before we do that, we have CRWD, which was a really great case study on this as well. Here's our swing low. Here's our original anchored VWAP. You can see price respects this multiple times. This is the day before earnings. We bounced right off this original anchored VWAP and absolutely ripped to the upside. Now, what's interesting is, as we moved up, we rode right along this handoff anchored VWAP, and now we're starting to find a little bit of weakness here. And so if we did start to drop down, this would be a level of interest below. And this is something Brian also taught me. Something is not support below until it's proven itself. I remember as a younger technician or chartist, I'm not a CMT, so I don't want to call myself a technician, but I'm looking at the technicals in the market, so a chartist, right? So I used to always say, there's support below. Well, we don't know if that's support below. We can say it's previous support, which may be a level that buyers regain or supply dries up. But for now, this is simply just a level of interest below. It's not support until it proves itself as support. And that's something that I really had trouble with, because I always would consider this is definitely support. But it's not support until it shows and proves that it is support. And that's something that I'm really fortunate to have learned, because a lot of people look at support and they just automatically buy because they think it's going to bounce there, but we don't know if it's going to bounce there until it does. And it's a lot better to be buying something on a confirmation of strength rather than just buying something because the price gets there. So that's something to consider when thinking about support levels as well. But this is the last example I wanted to go over, where you just have your original anchored VWAP. This is the last time that the price tested this original VWAP, so we anchor this handoff here, and you can see how well price has respected this. Now, another thing that I want to go over is something called the anchored VWAP pinch. The anchored VWAP pinch is something that is really powerful. It's essentially something that you do kind of similar to what you do with the handoff, except you just anchor a VWAP from the swing low here. So you can see this is where we consolidated. This was our low before we made a new high. And then you can see we also anchor a VWAP from the swing high here. Now, there are quite a few platforms that have the anchored VWAP. There's not a lot of platforms that have the offset for the anchored VWAP, and that's what I've done here. So if we go to properties and I just remove the bands and make them no bands, and then I go to this one and I make this no bands, you'll see that these are the two original anchored VWAPs. But notice how the price action is not respecting these areas perfectly, because price does not have to respect areas perfectly. There's people who get liquidated. There's people who become mega impulsive and buy something and then it's immediately sold into. So this is why we always have to have margin of error. So what I can do using the offset bands with this is I can go in and I want to say, all right, I want to take into account some of these times where the price is broken through this area. So I can go into this area, properties, and this is something I've already done. Generally, if I've created an anchored VWAP and I want to put percentage bands around it, I have to guess a little bit on what that margin of error is. In this case, I've already done that, and I know that there's about a 2% cushion below that I want to add to take into account all of this extra price action here that did break down through this VWAP. And this VWAP is just a single price. It's in the market, you want to have a price zone. Same thing here. You can see that we did break through this a little bit here. So what I can do is I can go in and I can add a little bit of an offset to the upside here. And I mentioned I already did that here. So this is a 1% offset above the anchored VWAP. And you can see how now we've created this pinch. If you're familiar with the Bollinger Bands getting really tight, this is very similar. So as the price action starts to trade within a more defined range, this VWAP flattens out, because at this point, the prices are trading within the same range. So the volume weighted average price becomes very similar, and that's how we create this pinch. Now, whenever you have a breakout of the pinch, that is a very strong indication of a very strong breakout. You can see it here. Just really, anytime we broke out of this pinch, the last 2 days, you've had a really strong impulse move up. Now, what I also like to add is the anchored volume by price. And I think we've talked about this a little bit. I mentioned that they're called volume shelves. At least that's what I look for. But the actual indicator is called the anchored volume by price. And it's the same concept. What I'm doing here is I'm anchoring the volume by price from the swing low here on September 21st. And you can see what happens. We have a bunch of shares that are holding right within this pinch. And so not only is price really starting to coil here, but you can see when we were trading at 114 or 115, all of these shares are holding at break even. So when I say the volume by price, we're instead of measuring the volume as a function of time every day, we're measuring the volume as a function of price. So we're looking at these different price levels and we're seeing, okay, this volume bar right here goes out the farthest. So we know at 114.50 or so, that's the point of control. So we know that the point of control is around here, but we also know that there's quite a few other shares holding in this area. And so this means that when the price is trading here, everybody is holding at break even. So what do we need to happen? All we need is for supply to dry up. We don't even need demand to increase, at least on an outstanding basis. We need it to increase relatively speaking, meaning if supply dries up, that shifts the supply curve and you naturally have an increase in price because relative demand has increased. So this volume shelf is really just a break-even area where majority of people are breaking even. Once those people stop selling and supply and demand start to get into equilibrium, all you need is a shift in that demand curve to increase price, and you really don't need a big move. You just need a slight move to really get this going. And so this was just a really great example of being able to use these percent band offsets on the anchored VWAP, so you don't have to, you can have a little more margin of error. You don't necessarily have to be looking at the VWAP as a precise price point. You can look at it now more as a zone. So this is something that's really powerful. I actually took this trade because of this setup. Anytime I see this type of setup, it's just an automatic time to go on the watch list and possibly pull the trigger here. So this was a great example. I entered in the middle of this pinch. I think right around 116, so a little on the higher side. But now at this point, it's paying pretty nicely. So this is a strategy that can actually be implemented in your trading. I don't like just going on here and talking to you guys about theories, right? I want to show you how I actually use this to trade and get an edge in the market using TrendSpider. So the anchored VWAP pinch, the anchored VWAP handoffs. Let's go and I'll just show you guys an example here on Apple. Apple is an example here on the daily chart, or excuse me, on the weekly chart, where you can see the same thing. And let me get rid of some of these things here. But you'll see here that, let's look at this previous high in 2020. This was really crucial once the price broke out here. So what do? Well, we anchor a VWAP from this breakout point, and you can see here, if we anchor the VWAP, how well the price has respected this area. This is where the status quo changed in the market. I want to take off the anchor. The anchor just means it shows the date, and I'm getting rid of it. But you can see how well from this breakout point, the price action has respected that breakout. So if we anchor the volume by price from this swing low, you'll see that one, we have the anchored VWAP from the breakout, and if we wanted to anchor another VWAP here, we could, but you can see the price action never got down there. And anchoring from a breakout point is just as powerful. And so horizontal resistance previously are pretty much our previous high pivot. Once we broke out of that, that's where we anchor the new VWAP, because that's where the status quo of the trend has changed. It's now up again. And you can really see how well the price respected this multiple times. And then if we anchor the volume by price from this low, you can see over the last few months, the price has really been trading within a range. That's creating a massive base for price. And then finally, you're able to get a strong move like we're seeing now. So the anchored VWAP is incredibly powerful. I'm lucky enough to have been taught about the anchored VWAP from kind of the pro of anchored VWAP, Brian Shannon. And so this is a great example of being able to use both the anchored VWAP and the anchored volume by price to see where those shares are really being distributed since a swing low or a swing high. I personally like to do it from the March lows just to get an idea of where a majority of those shares are holding. But all in all, hopefully this video was helpful, really understanding how to use the anchored VWAP, use that anchored VWAP handoff approach, and then using the anchored volume by price in conjunction just to get that much more of an edge in the market.
Yeah, that's terrific. And I'm seeing tools on here that really I've only seen on TrendSpider, such as the volume shelf, which is the gray bars. Would you care to explain those just really quickly for people who are not familiar?
Yeah, so if we're looking at volume as a function of time, we see these volume bars on the bottom, right? These are essentially measuring volume for we're on the weekly chart. So each one of these bars represents how much volume there was in a week. Well, what I want to know is since we bottomed in in March, where are those shares holding? So instead of the volume being a function of time over each week, we're looking at volume as a function of price level. So each one of these little bars represents a price level. So in this case, if we highlight, let's say, this little bar right here, and let's make this a little skinnier, and we measure the top and the bottom, you can see here that the bottom is right around 109, and the top of that bar is around 110.50, 110.75. So we're measuring, since we bottomed in March, how much volume has been accumulated or distributed across the board since March at this price level. So you can see a majority of people are holding from around 112 to around 117. So as supply dries up and these people actually just hold rather than essentially selling and rebuying, once that supply dries up, these big volume shelves can become a launch pad for price and create a big base for price to move up off of. And that's exactly what we're seeing here on Apple. So it's really looking at volume more as a function of different price levels and seeing where those volume nodes kind of show and where price it at what price, rather than just saying, oh yeah, the week of December 2nd had a lot of volume. We can now, using the anchored volume by price, say, what is the volume at this particular price level, which in my opinion is a lot more important than just saying we had a lot of volume come in on the week of December 2nd.
Absolutely. And these are tools that you'll find on trendspider.com. Click on the link in the description below this video. And if we could just take a quick look, Jake, at TrendSpider, maybe the main page or a page with some of the pricing on it, whatever you feel like showing to us today. I think that could give people a sense of, how they can get involved with TrendSpider very affordably. We're looking at it right now. What can you tell us?
So these are the current prices. However, I am going to give everybody a 50% off coupon code because we are about to start our holiday sale. So I'd hate for somebody to sign up today and then not be able to take advantage of the 50% off when we start that in the coming week or so. So anything you see here, $33 a month for premium, $65 a month for elite, $97 a month for master, cut that in half, and that's what you'll be able to get using the coupon code DM50. D as in Dave, M as in Modell, 50. So that's DM50 for 50% off any plan. So you guys can go in and literally choose any plan you want, whether that's a monthly or a yearly plan. And you can see the different price levels if you choose monthly or yearly. And yeah, trendspider.com is where you can find this. Just go to the pricing tab here and it's all there. You can see the different plans. You can compare them. You can see what comes with the premium versus elite, or what do I get with master versus the other two plans. So it's all laid out there for you. You don't have to guess like, oh, well, why is this $20 more a month? It's all laid out here. It shows exactly what you're getting with what you're buying. And we really want to be transparent in showing you what features you get with whatever plan that you choose. And as I mentioned, it's DM50 for 50% off either the monthly or the yearly plan.
That's terrific. I think I can remember that one. DM50. That's the coupon code to get 50% off. Fantastic. All right. So this was a fantastic interview with Jake from trendspider.com. Click on the link in the description below this video. You're going to want to check out the pricing tab, check out all the tools, and don't forget the coupon code DM50 for 50% off. Awesome. Well, Jake, we'll have to have you back here for another awesome tool available only on TrendSpider. So thank you for coming on.
Hey, thank you so much for having me. Hope everybody has a great holiday, and we'll see you soon.